I'm gonna start off with a question. When you hear central banks, what is it that you guys actually picture? You know, what do you actually think of when I say central bank? For some people, that's maybe like a mysterious man behind the curtain, right? Something in the shadows. For other people, are going to say, "Oh, it's the Federal Reserve." Of course, it's the Federal Reserve. But slow down, because if you, we have to understand before we talk about blockchain and digital money, and before we talk about how that ties into the investment strategy, we have to understand what a central bank actually is, right? If the central banks are exploring blockchain technology and we invest into blockchains, don't we need to understand what a central bank is and what are their roles and responsibilities and what would they actually be doing with the blockchains, right? A central bank is not your retail bank, right? Your Bank of America, your JP Morgan. It doesn't hold your checking accounts. It doesn't give you debit cards. It doesn't approve your car loan. Right, the central bank is the Federal Reserve. Yep, we're going to go a little bit deeper than that. You don't walk into a central bank. It's not your retail bank. So what is it then? Well, it's a bank for the banks. In the most simplest term, it's a bank for the banks. That's it. And there ends up becoming a structure. So you have your central bank at the tippy top of the pyramid. Underneath that is your banks, your retail banks, and then we're at the bottom of that, right? In the United States, the Federal Reserve is our central bank. In Europe, it's the European Central Bank. In the UK, it's the Bank of England. In Japan, it's the Bank of Japan. So basically, every major economy has a central bank, and here is the key idea, right? Your personal bank has an account at the central bank, right? Just like you have an account at your own bank, okay? And that's how the systems are actually connected to one another. So when Bank A wants to send a large amount of money to Bank B, it doesn't go through Venmo, right? But it settles at the central bank level, right? That's the ultimate final layer of settlement is at the central bank level, okay? Once it settles there, it's done. It's final. It's irreversible. So this is why central bank matters, because it sits at the top of the settlement systems, right? People want to talk about JP Morgan. What's JP Morgan doing? What's Bank of America doing? What's Citibank doing? Yeah, I think that those are important, but there is another layer on top of that that is much bigger than what your JP Morgans are doing. So a central bank essentially has three main jobs. Okay, put it in the comments if you guys know what the jobs are. One thing the central banks are responsible for are the interest rates, right? They influence the interest rates. They influence them. They influence the interest rates. If the rates go down, then borrowing money, or you want to take out a loan, well, that gets more expensive. And if the rates go down, then borrowing money or taking out loans, the interest rates become much cheaper. And that's the Federal Reserve's attempt at trying to cool down or heat up the economy. That's the one thing that they do, is influence the interest rates. The second thing that a central bank does is they manage liquidity, right? And liquidity, in its most simple terms, just means like how easily money can move, okay? If a bank suddenly doesn't have enough short-term cash, then that could have a lot of cascading effects. Panic can really start to set in. So central banks can step in during those moments. They can lend, they inject the money into it, right? They're there to stabilize the system. Okay, they are essentially like an emergency layer for some of these banks. And the third thing that they do is they oversee settlement between the banks, which is really important because billions, sometimes trillions of dollars move every single day. And that, you're talking about payments between like payroll and government flows and corporate transfers, right? We're talking about big money here. Well, those payments and those balances, they end up getting finalized at the central bank level, right? That's your financial plumbing. That's your infrastructure. And that's notice that nothing I said has anything to do with crypto yet. Nothing I said had anything to do with crypto. This is how the system currently works today. And this is why it matters, because the central banks are not tech startups, right? They're not here to innovate. Their job is stability. Their job is continuity. Their job is to essentially really make sure that the systems don't break. So if an institution like the Federal Reserve or the European Central Bank is exploring blockchain technology, this should tell you something, because they're not the ones that are creating the technology. That should indicate to you that something structural is changing, right? And what's inevitably changing, I think it's kind of simple. The whole world is digital. The entire world has gone digital. We've seen it over the last 20 years. Pretty much everything's digital now. Right? Your markets move faster. The businesses operate 24/7, right? But a lot of the plumbing underneath all of that, it was built from the 1970s. We're still operating on financial infrastructure from the 1970s. Yeah, it works, but it's old. It's old. So these central banks, when they're looking at blockchains, they're not looking at memes. Okay, first of all, they're not looking at memes. What they are looking at and asking is, they're saying, can this technology make settlement faster between the payments? Can we have faster and smoother reconciliation? Right? Can the cross-border transfers be more efficient? How about, can the systems operate around the clock, right? And at its core, guys, don't even think of blockchain like your token, the thing that you invest in. At the core, blockchain is just a shared record. That's all it is. It's like a shared notepad. It's a shared record that updates across multiple people participating in it. Right? It's a shared ledger. It's essentially what it is. When you strip away the hype of blockchain, all it is it's a different way of keeping records. It's essentially what it is. So if you're a central bank overseeing final settlement, then if you could find a better way of keeping up-to-date records, that's a very interesting technology to you. Because of modernization, right? They're modernizing. The central banks are modernizing. But the central banks are not exploring chaotic blockchains, right? They're certainly not throwing away their financial rules and regulations and compliance that they've had forever. The central banks are most certainly not embracing the free-for-all blockchains, the free-for-all systems. They're not. What the central banks are actually doing is they are exploring inside of controlled environments, very controlled environments, because their job is stability. Essentially, the central banks, we see that they're working through regulated pilots, supervised frameworks, because their job is not to innovate. It's not their job. Their job is to prevent systemic failure. So, if you were a central bank, would you plug your national settlement system into a blockchain that had no governance? Would you do that? If you were the central bank, would you plug your national settlement system into a blockchain that had no governance, meaning nobody was in charge of this system? Would you do that? Plug it into a system that has no identity. We don't know who from and to who these payments are going from. There's no legal clarity in those systems. Of course not. Of course you wouldn't, right? Because of risk, right? Because of risk management. You wouldn't do it, especially when you're talking on, like, it would collapse a system if you were wrong. If you went into a risky system, it would collapse the entire... Your dollar would be worth shit. You'd be beating people over the head with a baguette in the store. You know, for a little bit of soup. the entire country would fucking collapse. So anything that the central bank touches, it has to meet very strict conditions, right? And it's really all about control. The central bank is all about control. If something goes wrong in that system, can it be addressed? Who is responsible for the governance? Is there structure? Do we have identity? Who is actually transacting on this network? These are all things that they have to pay attention to. Of course, legal clarity, right? Reliability is a big one. Does the network go down, right? Can it handle billions of dollars under stress? So that's the filter between what blockchains are the central banks actually looking at and which ones are they automatically saying no to. Because if a system, if a blockchain cannot operate inside of regulations or rules or laws, then it's not going to sit inside of the central bank infrastructure. It's just not. Now, that doesn't mean that that blockchain or that token it has no value. It probably does if you get some really good snake oil salesman to sell you some dog shit on Twitter. Maybe you could find value in it. You found he was really quick to a really cute penguin meme, and you bought the emotion of it. Oh, it's a really cute penguin. I think I'll throw $100 in there. Hope I get rich. You know? All that it means is that those types of blockchains, if they can't live inside of regulations, they won't be used at an institutional level. Now flip it. What kind of systems would the central banks actually consider? Well, there are studies and public things that we can look at, and we can see that filter. We can see what type of blockchains the central banks actually prefer. They want the ones that have permissioned environments, right? Privacy is very important to the central banks. The institutional custody compatibility is very important to them. Clear governance, predictable upgrades, identity baked into it, right? All of these is important to a central bank because their job is stability. Their job is continuity. Now think about what that means. If the top layer of the financial system is modernizing, everything underneath it has to adjust, right? Think about the structure that I told you guys earlier, right? If it's a pyramid and your central bank is at the tippy top of the pyramid, underneath it is your retail banks, and we're at the bottom of it, then if the tippy top of that pyramid is modernizing, then everything underneath it is going to align with that. Yes or no? You guys follow me with this? Your bank is going to align with the structure that's happening above. They say shit drips downhill, right? Your bank is going to adjust to whatever the central bank is doing because that's their fucking boss. That's their fucking boss. So, as well as the standards are also going to flow downhill, right? Because if the central bank is operating on one standard, then the banks that are interacting and connecting into the central bank also have to operate at the same standard as that central bank. And I think that this is where retail often misunderstands the blockchain game. As I was saying earlier, a lot of people think that the adoption shows up in the price or in the charts. But the infrastructure adoption, like at central banks and companies and corporations and governments, that type of adoption, it shows up in things like the frameworks, in testings and pilots and interoperability and alignment with standards and compliance. So if a central bank is studying the digital asset layers in blockchain technology, if they're evaluating it and refining it and picking what they can use and what they can't use, if they're filtering out the good and the bad, and they're shaping this technology to survive inside of a regulated environment, right? Don't you want to figure out what blockchains they're looking at? Because inevitably that's going to dictate a fuck you, I'm rich kind of investor versus the ones that's like, I could buy a Camry. My poo-poo pee-pee coin, I could buy a Camry. That's really the separation of the investor that you're going to have. But you're seeing a shift. There's a fundamental shift that's happening in blockchain right now. They are upgrading their rails. They're not replacing the banks, right? And as an investor, you shouldn't be asking like, oh my God, Twitter is talking about this coin or that coin. You should be paying attention to what the central banks are doing, and you should saying, does my investment fit into this adoption and onboarding? Because the central banks, sorry to break it to you guys, they're not going away. I don't know what moron is saying, and the Fed, they're not going away. They're not. They're not. Are you kidding me? The Fed, the European Central Bank, the Hong Kong Monetary Authority, they're going to disappear? Get the fuck out of here. You got a better chance of disintegrating Amazon and Apple than you do getting rid of the Fed. But all of these systems are adapting. They're upgrading. And these systems are aligning with their structural needs to essentially run the world. Okay? And the blockchains, the ones that have a chance to integrate into that core and that aspect of finance, that's your winner chicken dinner. That's your fucking, I think that's the lottery tickets. Okay? I have not mentioned any blockchain yet. I haven't. I'm just evaluating what we know. And it's up to you as an educated investor to decide for yourself if your investment fits into this. I can't think for you. We're just thinking about this system logically, right? We're looking at the foundation. We're looking at the filter. We're looking at our investment thesis. We're looking at the full picture. And we're deciding whether or not our blockchains are inevitably going to operate at the highest level of the financial system, or if it's going to stay down here with the fucking slot machines. Pennies, where did they go? Fucking garbage? They went to fucking Staten Island where they belong.